Officer at T3Live.com. Welcome to today's recap and look ahead. So, interesting week. You know, we had one of these grindy, methodical, orderly pullbacks. You know, from the highs that we saw last week. You know, you had that S&P 2400, Dow 21,000. You had all the events. Boom, felt exhausted, or the market felt exhausted. I'm a little exhausted, but so did the market. So, we've been trying to figure out what pivot could hold. You know, the market's been pretty symmetrical from, you know, almost like the weakest to the strongest sector. You know, yesterday, the XLE went below the 200-day. The small caps went below the 50-day. So we were talking about the S&P or the spiders at least getting to the 21-day before thinking about maybe covering shorts, getting long, etc. And then you have the strongest sector, the tech, get to the 8-day. So it's almost like a nice symmetrical scenario. So if that was it, you know, maybe that could have been a pivot to trade from. Let me just show you why. First of all, here's the S&P cash. The spiders. Here is your little V bottom. Remember that little V bottom? Here's when you clear this descending trend line. And here is the first, accelerated trend line that's intact. And then here was, you know, that gap up exhaustion from the address of the joint section of Congress and blah, blah, blah. And here's your 21-day. So if you happen to have been short on this day or short when it went into the gap and said, hey, I think it's going to get to the 21-day, hopefully you covered today. I did come in short today, spiders, and I covered, and I actually flipped a little long. You know, I personally think tomorrow the jobs report is going to be good. I don't think it's going to be as hot as ADP, but I think it's just going to be in line and better, which you don't want a hot jobs report tomorrow because you don't want people to start talking about 4 rate increases. I think 3 is enough. So anyway, the question is, will it be able to clear this for a little bit of upside? So at this point, I feel like if we happen to open down tomorrow, if we happen to open down, we have a point of reference right here. If we happen to open up tomorrow and rally a little bit, and I didn't get involved today, I'd be a little upset. So I feel like this was a nice little spot, and I've taught you guys the red dog reversal so many times where, you know, why wouldn't I take a little bit if that's the case? Obviously, you don't take as much as you had intraday. In the morning, my real money trade was the IWM. You know, it actually wound up lagging in the end of the day, but whatever. The IWM, you know, we came in today, we talked about whether or not we can get a small bounce here at this price point. This price point was 135.78. So if you look at it, some guys from Redler All Access were like, how did you come up with 136.40 as your exit? You know, or at least exit some. I was like, well, it can come back up, retest the moving average, and the prior day's low. This is 136.60. This is the 136.40. So basically, you know, you go to your 5-minute chart just to show you how tactically you could have done this. In the morning, okay, here it was, okay. In the morning, I was looking to see if I could catch an oversold bounce in the IWM. So first thing first, push down, and then this reversal candle right there, okay, was a pretty big one. So to me, I was like, hey, you know what? I haven't been long the IWM in a while. Let me get long versus the low. Got long versus the low. This was your red dog reversal low. And then we added a lot here. I was buying a lot. I'm like, how come it can't go? How come it can't go? This was around this 136. And then I know it's not a lot. Some of you guys are like, oh, you're day trading for pennies. Well, you know, a move's a move. So bought a little bit, added some. And then I sold a decent amount here and a decent amount into my calculated easy sell area or easy bounce back area. Could have went more, but I figured look at the moving averages. It's been a hard time getting through. At least sell it there. Okay, and then came in, made a higher low. I think I bought some back. Then made a lower high, and then you know, on this I sold a little bit, and then I held small. Went to the gym, and then before I knew it, came back in the afternoon right around here, and I was stopped out. Okay, I was in some just in case it continued, but whatever, got stopped out. But this was a nice trade. This was a nice calculated trade. The IWM has been down 5 points. And then here could have been a higher low, and it could have went. It didn't. It made a lower high and still got rejected. So that's why I was a little bit more cautious. So anyway, you know, the IWM still doesn't look, you know, so hot. But whatever. We'll see what happens next. Here is your bigger support. If it happens to open down tomorrow, we'll try it again. If it opens up, it's not really giving you a signal to be long anyway. Remember this little relative weakness right here? Every other sector made a nice new high. This one went by like 20 cents and then failed. Surprisingly, the XLE actually gave you a better red dog reversal. Why did it give you a better red dog reversal? I'll show you why. Well, first of all, you know, we were long here. Remember that? Got stopped out. So if you got stopped out here and said, hey, you know, it opened red, it just came from 72.40. Maybe it's a little stretched. Here it opened, down in the hole, which if you went home short because it broke here, congratulations, you got paid a little bit. You covered some, hopefully on day 3 down. I tweeted that. And then some of you guys said, hey, I'm going to buy it for a little red dog reversal. It reclaimed 169.62, and you got 50 cents. All right, so maybe it wants to rally back and retest this spot. I wouldn't be taking much overnight, but some of you, because of the strategy, say, hey, I made good money today. It was calculated. Let me just buy it. Let me just hold a little bit, and this is where I would sell some. And if you're looking to reshort because you shorted here or added here and said, I'm going to cover a little bit in the hole, this would be your spot. So anyway, at least there's tradable stuff going on. As far as the Qs, okay, the Qs holding the 8-day, still hanging up there. Pretty friggin' impressive. At this point, if the market wants to turn up tomorrow, this probably will turn up and, be the best place to be. It's been the best place to be since, the start of the year. It's been above the 8-day moving average this entire time and the 21 days. So still lots of momentum there. And then go to some stocks. I was in Amazon in the morning. Got stopped out at lunch like I did with the IWM. It still looks okay. Unfortunately, I was thinking about taking some into the jobs report, but I said, you know what, I'm just going to wait. I don't feel like dealing with it on a Friday because chances, Fridays aren't my best day, especially since I'm in short hills. But this does seem like it can go and break above this if the market wants it. Google also is acting pretty well. Market sold off, and this, actually perked up a little bit above this little pivot. And now it seems as if, where it failed from on earnings, it's right there. So this could also go. So, some stealth undercover strength. This is where we had it in the note as the last pivot to buy. And then if you wanted to buy it versus the 21-day. Facebook still hanging in there, just grinding along. As long as it stays above the 8-day, guys are staying long and looking at it for opportunities, and no change here. Apple, right off the bat, they beat it up through the 8-day. Lots of stops went off. I guess either they wanted to steal the stock, because it went through it, and then it came right back up. So it's still strong. If the sellers really wanted to take over, they could have by closing it here. But again, came right back. Still looks good. Sometimes they clean you out. Like everyone who had a stop at this 138.60 probably got cleaned out, and now are like, oh, I'm out of Apple. How do I get back in? And that's when sometimes it runs. So if you're short Apple because of that move, that would be a little careful because some buyers came back and it didn't. Technically it still looks just fine. Maybe a little bit more sideways action before it goes again, but ultimately, it happened fast, but there was no downside to it. So there's still some underneath buyers. People are asking me, what about Tesla? Tesla's at one of these decision points where, it broke trend. Okay, it had a gap down after earnings, never filled the gap, and it's still getting, rejected at the 8-day. So now it's below the 50-day. So at this point, I would just be very nimble here. And definitely not just sitting because, you sit in a momentum name when it's above the 8 and the 21-day. Okay, you get more tactical when it's below it until that changes. Same thing for NVIDIA. It's below it. Giving you some trades here and there, but ultimately, until, remember this little failure at earnings right there, until this takes out this downtrend or gets a strong close above the 8-day or the 21-day, it's still vulnerable. So it's getting close. It's coming to a head. It's getting very tight there. Celgene, I tweeted to Redler All Access yesterday. I bought the calls just because, again, I think I went over this in the recap too. I don't like to buy stock in bios just in case something crazy happens, but ultimately this was a nice push, stayed strong all day. I do think it gets to 130-ish. If it goes up another dollar or two quickly, maybe tomorrow, I might even turn it into a call spread. We shall see. What else were people looking at today? Snap. I'm not long overnight. I was long last night. To me, it's not really compelling. You had your, obviously, day 1, day 2, sell the open, short, get stopped out, short overnight because of the strong closed into the, or weak close into the lows, gap down. You could have bought it versus this low here. We talked about it filling the gap to retest this. Well, it already did. So now from here, it's not much, it's not just a good setup. So why be in it for now? That's why you see some of the volume leaving and some of the range constricting because it's just not that compelling. Remember, Tepper talked about like a dead area. Well, not a buy or a sell here. A little buy here, buy yesterday. Today, I actually had it overnight. I bought a little bit on the open because it was quick, but then just got out of it and said, now I'll wait and see. What else? GLD, I did send out a note to cover shorts if you were still short from that red dog, the red doggy dog reversal. What's a red dog reversal? You guys know. Trades above a prior high, comes back below into moving average. That's your exit if you were long during this rally and maybe even test or short. And then it broke this accelerated trend off the lows, or not accelerated trend, but yeah, accelerated trend off the lows, and now it's in no man's land. But if you got short here or got short here, not a bad spot to cover a little bit, even though there's some room. It's kind of in no man's land. Here's more support, and there's more resistance. But in front of a jobs report, if it happens not to be so blockbuster, it could bounce. So why not take it off there? TLTs, I've been telling you guys to sell rallies all year. In my note, every time I list TLTs, I'm going to say I said it's a rally to be sold. I think it's going to make new lows. Well, here it is, almost at lows, and might even be there tomorrow. Wasn't a blockbuster trade, but below the 200-day this entire time tells you to be short. And I've been in the camp that I think we at least get 3 rate hikes, and this trend has been broken, well before the election, and still looks like new lows to come. So all in all, tomorrow is a jobs report. I'm hoping if it's like 300 plus, I think that it might be too hot. They might say 4 rate hikes, and then rates go up and markets come down, and then we'll see if, well, not markets might not come down. We'll see if the banks hold up. Lately, the banks have been sold on strength. Let me just go over J.P. Morgan before I leave you, because then I got to jump. J.P. Morgan's had a heck of a run, and it's still showing a few signs to me of being tired. Came into that gap on that exciting gap, or the exhaustion gap up, and now it's holding here. So this is your point of reference for tomorrow. If J.P. Morgan gets below and stays below 91.10, we could see a little bit more weakness in the overall market into this trend line. If it hangs here, then the downside's muted, just like we saw today. On that note, I will be in Short Hills tomorrow. I will tweet you some of the levels in the morning, and we'll figure out what's next. Have a great night.